Dear students, today in this video, I will be discussing with you few basic concepts which are very important if you want to understand properly the unit of national income. So without unnecessary delay, let us begin. In this present lecture session, I have decided to discuss with you these 6 important basic concepts for national income, estimation understanding, economic territory, normal residence, factor income and transfer income, net indirect tax, net factor income from abroad, and factor cost and market price. প্ৰথমতে aha discuss কৰো economic territory বা domestic territory. Production activities are carried on in the territory of a country and by those who live in the territory. Now the question is, what is the scope of territory? Is it simply political frontiers or something else? The answer to this question gives rise to the concept of economic or domestic territory. According to the United Nations, economic or domestic territory is the geographical territory administered by a government within which persons, goods, and capital circulate freely. One example you have already seen in the PowerPoint screen. Let me give you another example. Air Indian services between different countries are treated as economic territory of India. Eto slide normal resident or বিষয়ে আলোচনা কৰিম মই ভাবো তোমালোকক resident আৰু citizen or difference to কৈ দিয়াটো ভাল হ'ব এতিয়া সোৱা citizenship is basically a legal concept আৰু সেই কাৰণে it is based on place of birth of the person or some legal provisions allowing a person to become a citizen. On the other hand, residentship is basically a economic concept based on basic economic activities performed by the person. গতিকে আমি ৰেসিডেন্টৰ ডেফিনিশন বা সংজ্ঞা কেনেকৈ দিব পাৰো আমি ক'ব পাৰো a normal resident of a country is a person or an institution who ordinarily resides in a country and whose center of interest also lies in that country. এটা উদাহৰণ দিলে সাগে তোমালোকে ভালকে বুজি পাবা a person residing in England for a business having an Indian passport and Indian citizenship is non-national for England but national for our country India, but he will be treated as a resident of England, not that of India. Eta sage concept to aru clear ase noy jano aha ami tetia hole ami next slide ole move koru etu slide ot soa দুটা কনসেপ্টস মেনশন আছে এটা হল ফ্যাক্টর ইনকাম আৰু এটা হল ট্রান্সফার ইনকাম now what is factor income? Factor income refers to the income received by factors of production for rendering factor services in the production process and rent, wages, interest, profit এই গোটেইবোৰ হল কি factor income or example. Now, what is transfer income? Transfer income refers to the income received without rendering any productive services in return. We can mention few examples of transfer income. For example, old age pension, gifts, unemployment allowances, etc. etc. These are the examples of transfer incomes. Point to মই আৰু অলপ ক্লিয়াৰ কৰি দিছো এতিয়া সোৱা মই কলেজত কাম কৰো চাকৰি কৰি আছো So monthly my salary pass. So this is my factor income, because I am rendering my service. But a time will come when I will become old and I will get retirement. Retirement pisot moi ki pam? Pension pam. So retirement pisot jitu pension pam, hetu hobo mor ki transfer income. Let me change the slide again. Now net indirect taxes, or in short NIT. In order to understand NIT, we should know what is indirect tax and what is subsidy. Indirect taxes refers to those taxes which are imposed by the government on production and sale of goods and services. And subsidies refer to financial assistance given by the government to the enterprise on the production of certain commodity. What we came to know from this? We came to know from this that in case of indirect taxes, government takes money from the producer or business firms, and contrary to this, in case of subsidies, government gives money to the producer or business firms. Both these two concepts are opposite to each other, and the difference between the two is net indirect tax or NIT. I hope I am making myself clear to you. এতিয়া আহিল net factor income from abroad, and in short NFIA. In order to understand NFIA, we have to know what is factor income from abroad and what is factor income to abroad. See, factor income from abroad is the income earned by the normal residents of a country from the rest of the world in the form of wages and salaries, rent, interest, dividend, and retained earnings. On the other hand, factor income to abroad is the factor income paid to the normal residents of other countries, I mean non-residents, for their factor services within the economic territory. As you can see on the slide, the difference between the two is NFI. This is the formula. Let me again change the slide. Factor cost and market price. Factor cost is the total amount which manufacturer had to invest in production of a good or a commodity. It does not include indirect taxes imposed on the final product, but the market price is the final cost at which the manufacturer sells goods to the customers, and these are inclusive of all exclusive taxes. Now I am concluding my current session. In my next class, I will discuss different basic aggregates of national income. The concepts discussed today are very much important for you, and this will help you to understand the concepts to discuss in the upcoming classes. If you have any question, you just post to me. I will answer your questions. Thank you so much. Have a good time.